My camera's doing that out of focus thing again, Joe. It's probably a good
Oh
thing.
yeah, your Barbara Stanwyck feature. From the younger people won't know it, but Bonanza and Ponderosa. It was in replays when I was younger, so I was an OG.
I need to shave. I need to fucking shave, dude.
Oof. Oh, come on. Your wife and kids are out of town.
Yeah.
You're going to be terrorizing Palmetto K for the rest of the week.
Palmetto what?
Where are you at? Aren't you on that development? Palmetto K, CAY or whatever?
Yeah, I probably won't go that far of saying what development I'm in on the show. But
yeah, no, you did the other day. That's why I was.
Oh, I did? Oh,
yeah,
well, then I'll say it again. Cutler K.
Cutler, that's right. No, because I drove by it that time when I was coming back from the Glades. And I was like, because I was coming up West Cutler or whatever. And I kind of was in here. I was like, that looks like a nice area. As I was driving up to, up Cutler Bay Road.
It's a lovely area. I mean, it's, it's like a planned kind of gated community, but it's been around long enough now that foliage is growing in decently, so it doesn't look quite as formulaic. It doesn't look quite as, I don't know. When we first moved in 13, 14 years ago, it was a little bit, just looked boxy, but it's a nice place to live.
Oh, wait, when did you guys move in? Yeah, that was right after Katrina, actually, wasn't it? Or Wilma?
14 or 15. No. Yeah, maybe so. 14, 15 years ago. Yeah, something like that.
Because I remember 05, I want to say like October, November, there was, I don't know if that was Katrina or Wilma or one of those came through and just stripped it all bare for a couple of years. That's why I was thinking it might have been when you first got in there, you were in the, it had been sandpapered at that point.
Yeah. Our house has never had ill effects of a hurricane. So we're happy about that. So, oh man, fucking FTX is killing it. Okay. I got some shit loaded up, Joe. Because I was way behind this morning. I got to find one more piece. Why don't you give us a little rundown on what you're seeing in the market? Let me share a screen. Our fear and greed is back down to 30, which is fucking annoying. I was excited about us gaining back, but Ethereum was over 1,600 yesterday.
Yeah, it's given some back. Everything's given a little back today, but that was to be expected. Yeah. I mean, as we said on Friday, I think I said it, but maybe we both said it, that, this weekend was where you're supposed to start thinking about, do you want to take some profits or not?
Yep.
It really wasn't the time to be adding. And obviously, because that's what everybody was saying. So obviously that seems to be true, but that doesn't mean it's going off a cliff. It just means there's opportunities.
Yep.
So
absolutely.
When I look at stuff like, again, it depends on where you are. Like if you came in last week or the week before with that 25% allocation that I always talk about, I'd be watching here right now for maybe another 25% allocation in. And I'd keep track of whatever dip comes at this point. I don't see a huge one, but if it is, it's a buying opportunity. That thing's going to V right out of there, most likely. Again, I'm just speculating. The stock markets look okay. Dollars like holding steady. I don't see anything really out there other than profit taking right now.
Absolutely.
But that's just my opinion. Again, not financial advice, just what I'm thinking. I did see, I was looking at Geist on Phantom. I picked up a little more of that. I picked up a little more Phantom. I didn't do anything more with Polygon Matic yet, just because I had that nice run up. I'm sort of expecting, people will panic now when they see like these little 5% corrections, and it might be a dipping opportunity on Matic. What else did I see that was interesting? Monavale. I mean, I keep watching that. That thing's moving around. I mean, that's the trading one right there. With only 5,000 tokens, digital axe. I think you can be doing, that thing's swinging 6 to 25% a day. Shit. So, just watch it. Everybody.
What's the token name again?
Mona Vale, VALE. There's another Mona, so make sure you have the right one. The company is called Digital Axe. I always want to say digital lax because I keep seeing the airport moniker there, but it's digital axe. But just if you guys are looking for something to trade,
no, it's not Mona Finance. I'm trying to find it. I wanted to see.
It is Mona as the ticker, but it says
Mona is the ticker.
I think so. Mona Vale down there.
Vale. Here it is.
Yeah.
Mona Vale ETH. Mona Coin. So there's a Mona Coin and there's Mona Vale.
Mona Vale is the one.
It's Polygon.
I believe so. I know they expanded to a couple other ones.
Yeah.
They're originally
a shit ton of volume, but a lot of trades, a lot of MTF trades here.
Yeah. So this is one, when something's swinging like this, I'm not telling you this, Brad, because you know it better than I do, but when stuff's swinging like this, you get comfortable with the moves because
10%.
So much of this right now is just, mean reversion type stuff going on constantly in crypto. So, if you get the staying power, you can usually wait it out. And, with Mona Vale, I could see, there's a trade every day in there.
Dude,
and I'm just talking about longs.
There are multiple trades every day. Now, I don't know if there's enough volume, but there's certainly enough spread to make it worth it. 6% minimum within 24 hours over and over again. Like over and over again. Shit, Joe, what did you call me?
I keep talking about these guys.
Yeah, but I didn't know we were getting these. This is beautiful.
Yeah, no, there's so much. This is when I looked at it. Well, we were watching it for a while. It was down in the 200s, I think. And then one day I came back and looked at it and it was like 900. And I'm like, because I'd seen this twice before with it. And so then I started tracking it. It went back down to 4 and then it ran up to 15 or something and 8 and 14 and 12. And, these are $100 moves plus multiple hundreds almost every day. So when you see something like that, that's what again, trading, I believe in this long term, of course, but trading is really the way.
No, we love this project. Yeah, this is a good trade. I'm going to be setting up the alerts on this when we get off this call. That's some sweet plays. As long as there's enough volume, enough liquidity to support in and out on this, even if I lose, a point or two on this, there's so much room here, margin on these profits that it's worth it.
Yeah. And I see a lot of that type of motion. There's a lot of volatility in Geist right now. Just moves every day. And that thing's trading. I think it's less than a penny right now. So if you want to play, I still have some of that locked in that protocol just because I'm like, who cares at this point? But
yeah,
you got volatility there. You see the volatility if you're playing big boys, ETH and BTC over the last couple of days, there's some solid 4-point swings. I think today we're in 5-6 range. So, I don't know at this level if I'm buying in a new thing to hold it. I'm definitely trading, and I'm also definitely adding on dips to the ones I like the best. And everybody knows my favorite. So mine I think I'm going to go with my 5, not counting the big ones. These are big. Polygon, Matic, obviously FTM I still like. Geist I'm playing around with more. But obviously Curve, Sushi Swap, all of those look interesting to me. So, because I believe that those DEXs are going to be okay. I believe they're going to be some kind of a compliance solution figured out. And if the US doesn't do it, then they're all going to be somewhere else.
Geist is making some nice moves up and down as well.
Yeah. That's one that, look, I think you could still get.
Oh, they're on Polynex, huh?
Yeah, I don't know. I'm still over on the FTM side. I haven't moved down, Spooky Swap, that kind of thing.
Wow.
I haven't moved into Polyonics. I didn't know they were there.
Yeah, it doesn't look like there's enough to support it there. I would
check it out on FTM. No, what we look for on our trades. Okay.
Against FTM, I can see. Yeah, that's on Spooky Swap. Let's see what that looks like. Yeah, maybe definitely not as mean reversion tradable as
no.
Mona. Nowhere close. It's maintaining pretty steady.
this is where you get a piece and then, you know, you wait for it to get over a penny and you dump it at that point. Not because I don't think it's going to, I mean, this could make it long-term. I don't know. You know, these anonymous teams make me a little bit nervous sometimes, but I think that some of these guys actually might be doxxed. I'm not sure, but it survived and it's still surviving. So when I looked at the carnage of everything from Hatter through Fort, through, you know, all the rebasing plays, through a ton of it, Blizzard Finance, you know, is gone. You know, after they got exploited or messed up that chain link price oracle thing on the Luna, then they got gutted. You know, they rebated everybody. I think I got 40 cents worth of Luna from them as a thanks for playing. And then they shut down the protocol on June 30th, and it's just gone. Yeah. But people are still trading it, the token. So I don't know, that there might be something funny going on there. I mean, just the like trading Doge or something, you know, there's no meaning. There might be something there, but I figure I'm not going to pay attention anymore. I'm just going to focus. If I like that, then I'm going to like Geist. Now, also Aave's still sitting. I mean, I can't pull up my prices because I'm on the phone, but you know, I think that's sitting around 90 right now. I mean, I bought that at 400 and to 1,000 or 900 or something a couple times. I mean, I just think that you find, to Eamon, to your comment about what I look for in trades.
85.71 on Aave.
What is it?
85.71.
There you go. So, you know, I tend to look at stuff that I like, that I think makes sense from a business standpoint, Eamon. So any of the layer ones and layer twos, I think makes sense from a business standpoint. A lot of the lending protocols, the DEXs, the yield farms, they all make sense to me. Anything peer-to-peer finance makes sense to me. So I kind of find the ones that I like there, and then I just watch them for a while, and I try to get a feel for their behavior. You know, what do they correlate to on the other ones I like? You know, what do they not correlate to? But the most important thing is I always keep track of what price I bought it at. Which, you know, is well, sounds ridiculous, but you know, when you're doing 20, you have to. Go ahead.
So as Eamon said, one of these shows, it'd be cool to see what you look for on your trades. And I agree. I think we should break it down because, you know, I'll tell you, Eamon, I do two types of trading here, and I am not like, I've tried doing the swing trading shit, and I just can't stomach the fucking 24-hour a day, watch the thing go. I get a little bit of that with my mean reversion plays. So the charts I was showing you a minute ago, that's our mean reversion indicator at my company, Material Indicators. It's called MTF. Essentially, it's a buy the dip indicator, but 95% of the time, within 5 days and usually within a few hours, those trades close at anywhere. You know, well, they almost always trade at 1.25% at 96% of them, and then oftentimes they have much bigger gains if you want to stay in the trade. I'm very conservative. I take them very quickly. But I think a good idea, Joe, is we should put together a list. So for me, there are fundamentals based trades, things I'm accumulating because I like them, like Phantom and Matic, etc. And kind of those criteria that I put together in my head about the team, about the project, about business development, about the technology, etc. And then the day trading shit where I'm automating and doing trades on centralized exchanges, as well as I'm working right now to move it into automating on DeFi. I think it'd be cool for us to put that together one day and have a show where we talk about it, and maybe even have people like Sean on to talk about some of his trading strategies, etc. So I think that's a good idea for a show.
Yeah, no, I mean, because everybody manages risk differently, and everybody makes the entry decision and the exit decision differently. And what you don't want to be doing is all of a sudden something happens, force majeure or something else, and shit's moving, and you got to decide what to do right then and there, and you haven't even thought about it, like where you're exiting. So, you know, to me, I always like to just, you know, like when I'm saying this is a bucket of money that I'm just trading, trying to, you know, I think I hear people calling it different things, but just trying to make it bigger. There's not a holding strategy in this bucket. Then when I'm in 6 or 7, if I wake up or get alerted in the middle of the night and it's up 30%, I'm out of that one. Yeah. And I'm rotating to something else. But as Brad said, that is a 24/7, 365 attention requirement. And more often than not, you're feeling the knife of, is this shit going to drop out to nothing? That's the stress you're holding every single second. And it does wear you down. So it's only can do it for short durations.
Let me show you. I'm going to put on screen a little strategy I've been noodling on and working on, because, the Eamon said 1.25% for a 5-day trade ain't bad at all. And I agree with him, but there are plenty of them though that bleed out. And that's the risk management is a difficult part of it. He says, always a failure of mine with perps was holding it far too long and not being happy with small profits in short time frames. I will tell you that in the bull run, and that's the caveat, I was using this mean reversion tool to accumulate a shit ton, all at 1.25% profit. But one of the things I've been thinking about a lot is right now I trade across all kinds of pairs on Binance US, et cetera, and other exchanges where I can automate my trades using 3 commas. But I've been working on a strategy to focus on stakeable tokens, right? So that given a big market downturn, if I'm in a couple of trades that bleed out too much, I can go back to stake those and do a little better. So the idea would be is that I would be able to do the mean reversion trades, take profits, take profits, take profits, take profits. Market bleeds out, Ethereum, Matic, Phantom, whatever. I then automate taking those tokens that I've bought either on the exchange or on DEXs and stuff them into staking, right? So that I'm earning on those tokens I like, tokens I trust, tokens I think have upside value. I'm earning on those tokens interest while the market is way down. So I don't feel like I have to exit all of those trades. I'll still exit the other trades with stop losses, but on those, I might start accumulating it. So I haven't run the numbers yet on this yet, but I think there's a ton of potential in the projects that I really think have upside potential, ETH, Phantom, et cetera, Matic, to be running these mean reversions, buy and sell, buy and sell, buy and sell. And then on the down days, stake the losses into staking and earn back on them until they recover again. So that's something I've been working on. I haven't implemented
single
it yet,
single staking.
Yeah, no, staking, proof of stake staking. So network
not
staking.
Liquidity.
So
pools. Okay, got it.
Yeah. No impermanent loss stuff, nothing. Straight into secure the network staking. And so anyway, I haven't run all the numbers on that yet, but it's certainly a strategy I think makes a lot of sense.
No, I do too, because I remember last year around this time, or maybe the month June-ish, that those yield farms were still paying high yields, and the underlying platform token that was usually the compensation hadn't gotten gutted yet. So that held me. I mean, I think I was even up in June last year just from the yield on all those things we were in. I'm talking about Define and Quick Swap and Sushi Swap and Crystal and Cometh and all of those. I'm not talking about, we hadn't moved toward the rebase stuff yet. And those yields were just killing it. I mean, but those yields aren't there anymore. So, and the 2 token pools, but some are, I was on Define yesterday looking, and Matrix is in there with ETH and Define at like 150%, but you look at the amount that's in the liquidity pool and it's like less than $10,000. Yeah. And you're like, where before that would be 800,000, last year, 3 million. Right. So, you got to think about platform risk, i.e. platform go bye-bye, when you look at that yield, because it may stay, it may not, but there are still yields out there. I just don't feel as confident in the platforms right now. I mean, Sushi Swap, yes. Uniswap, yes. The big ones, yes. Cometh, I still trust. I haven't looked at Crystal in a while, but a lot of them, and we see these just disappear sometimes. So that's the risk. That's probably why it's 160%.
Niblett said there are no happy days in investing. Price up equals should have bought more. Price down equals should have dumped. Stable equals opportunity cost. I think
Exactly.
everybody feels kind of that way at the moment. But you know, look, our this mean reversion signal, we have had well over 300,000 signals from it over the last 3 years, and it maintains a pretty steady play. We need to do better at identifying the optimal ones to be into and the market conditions to not take those trades. And one of my partners has actually worked on a filtering and screening methodology that we're going to try to automate with that. But overall, it's a high performance tool. So, hey, Eamon, if you want to talk about automating that, we'd have to figure out a model around subscriptions on it. Be happy to chat with you about it on the DeFi side. Anyway, let's see. Anything else on that you got, Joe? But I would like us to put together like a way we do fundamentals analysis, a way we do building trust in particular platforms, strategies that we implement, et cetera, et cetera. I think that'd be a great idea.
Yeah, I mean, we could write it up. I mean, look, if you talk, it's hard with fundamentals in this space, but number one, how many tokens are there? How many are set to be issued? I mean, there was one thing I see articles a couple months ago, obviously, but somebody talking about could Shiba or SHIB or whatever the hell it's called get to a penny? Or maybe it was $1. No, get to $1. Will it hit $1 in 2023? And I looked and there's 4 quadrillion tokens. And I'm like, is this ever going to be worth $4 quadrillion? I say no.
It flips Tron this weekend.
Yeah. But, I look at stuff like that and I just go nonsense. So with that thing, to me, it's a trade play. You trade it. Yeah. It's one of those ones you can trade because there's no fundamentals basically, other than maybe there's going to be something in the future, or maybe it's a currency, or maybe it's this and that, and they talk up stuff. But, to me, that's a short term. When we talk about Polygon and we look at fundamentals there, look, I mean, we know what the fundamentals are there. We've used it a million times, plus the Disney play, plus everything else. I mean, that's solid fundamentals, and they've executed. If you can pull off those M&A deals, you can execute. And they're doing it. Phantom still, everybody says it's the best technical one, best technical blockchain. Everybody says I think is the cheapest right now. So it's got all the key technical stuff. Now it's, can they execute? And so that's kind of what I look a lot at execution risk. But the important thing for what Niblett said is, look, that's the tension in your brain all the time. It's like, oh shit, I'm up 80%. Should I take that or not? And then, well, but what if it goes to, $400? I'm leaving all that money on the table. So that's why, you trim when you're going up like that, so that your in-house money. So if you do hold too long, at least you got your profits off the table. Into something.
That's why I fucking love these when the automation is working right for me on that strategy. I love taking the 1 1/4s, and I don't ever look and see what I could have had. You know what I mean?
Because you don't care what the token is.
Table it up, table it up, table it up, table it up. Because I want to stack it up. I don't give a fuck.
You're buying. You're not buying and selling. Are you buying and selling?
No,
or are you just buying?
Buying and selling, taking the 1 1/4% profit.
Heck yeah.
And it's frequent enough. The trades are frequent enough that I can do that. And to me, I'd rather not know where it went afterwards. But even if I do know that it went higher afterwards, there's a little bit of like, I could have made more on that. But at the end of the day, I also could lose more on that. So, and when you're buying something on the fundamental side, I'm much worse at this than you are, Joe. Holding on because I think it's going to grow more. You know what I mean? I was guilty of that with fucking Ohm. I was guilty of that with others. You are the master of saying, I'm going to dump this shit and take my profit. And I've gotten better over the last few months of saying, okay, shave the profits. At the very least, pocket what I put in, right?
Yeah.
The funny thing is, if I go into a fucking casino in Vegas, I take a set amount of money and I say, this is it. This is it. When this is gone, that's it. I'm out of here. If I make money, when I make back what I have came in with, the original money goes back into my pocket and I play with this until it's gone, or I'm like happy because I've made a lot of money. why I don't apply that shit to trading, or haven't consistently applied it to trading, I have no idea. But
it's because you're a hodler.
I'm getting better at it.
Well, you're a
Yeah, that's
hodler.
true.
You want to believe, and
Yeah,
some of these will be the Amazon at $1 story. I bought Amazon at $1. It's like, and held for 25 years, which God knows why anyone would do that. But the point, or how anyone could have the stones to do that, to hold it that long.
Yeah.
I mean,
yeah.
hopefully they sold some, but what I look at it is exactly what you said, that, those are guesses, in our head. We're making intuition and instinct calls. So you can't be trusted to make the right call, okay? Because you're not just flipping a coin and saying one or the other, and then it's 50-50. That's probably the better way to do it. But, we're like trying to intuit what's going to happen. And, that's why I like to have this set of rules where, like if I buy, well, let's just say Phantom. I don't really sell Phantom much, but let's say it's at 30 cents right now, maybe. If I go in and buy that today, I'm thinking in my mind, where would I sell that? And so to me, I'm selling 10% at 40 cents. If I bought at 30 cents, I'm selling 10% at 40 cents. I'm selling 25% at 50 cents. And then I'm going to be looking in the 70, 80 cent range for moving the rest of it. Because that way, if it starts dipping at 50 cents, then I got dry powder to actually come in and DCA. Exactly. So that's the one thing we also don't talk a lot about, is in the sequence where the DCA comes in. So you take that powder off, the winnings off. That's your dry powder if you have to DCA. If you don't, and it runs up to 80 and you liquidate, well, you move on to the next one. And you track Polygon and you wait to see it drop back into 60s or 50s, and then you go play the game again there.
Yeah.
So, I mean, if you don't do that, then you just get stuck. I mean, I've held stuff, I mean, God knows I've held stuff from, watched hundreds of thousands, 100,000 plus turn into what, $4 or something, in some of these, but it's paper profits. So, you wish you had done it, and maybe there wasn't an exit market for me at that point. So maybe I couldn't have done it, but, I learned my lessons too. So now
Niblets brings up a really good point. He said, because this makes it even harder. He goes, what do you do with yield bearing tokens? Selling and price rises means losing yield. That's one of my biggest weaknesses, is knowing that this thing is earning more. I absolutely fucked myself over the last 6 months, right? I did it with Alchemix. I did it with Olympus. I did it with all of the tokens I had. I'm like, well, it's down a little, but I'm earning more tokens, so it offsets it. Well, at some point, the earning more doesn't offset the fucking, loss drop from $1,500 to $40. That is not any longer, the math doesn't work. So I think what you do there is it's gotta be the math. You've got to track this in a spreadsheet or something and say, okay, here's my overall value on this trade, or here's what I put in. I've gained X. I should take half of that off the table, or 20% off the table, or my goal is to get to my original investment. So I'm going to keep taking pieces off every week, every 2 days, whatever it is, so that I'm back at the core amount that I put in my pocket. And then it's all house money. Right. But it is hard. It's really hard going, oh shit, I'm giving up all that yield, and then you kind of reach the bottom where it's like, well, all right, fuck it. I'm just going to let this ride. So,
well, if the yield is coming in that same token, then you get into that, like you just said, Brad, that sort of not dilute. It becomes like this circular delusion where the forces keep driving it down. If the yield is in something else, like maybe USDT or a stable, like a bond type thing, then then it gets a little bit trickier, because you got to add that yield on top of the price. So let's say it is $100 with, this is a quick thing, this is not entirely accurate, with a 9% yield. If I'm looking at exiting, I'm calling that $109 in my mind. Doesn't mean, I was always a little funky with bonds anyhow, because some of these, they're almost dyslexic to me sometimes, because it's such an inverse thing. I don't always do well in instantly calculating those types of numbers, because sometimes I go the wrong way. But, to me, that is another tough one, because you're like, okay, if I'm getting 12% yield, 10% yield, and the price goes up 100%, or where does it make sense to sell that? To me, if it goes up more than, I guess, 12% quickly, ahead of that yield, then I start thinking about it. But if it goes to up 80%, 100%, now, is it calculating yield off the number of tokens or the value of the tokens? Off the value of the tokens, and you're getting that higher yield on the higher, say, dollar value. On the others, you're not. So that's another thing to have to factor in. But generally, I don't see it. I'm talking about not 1.25 point moves, Niblets. I'm talking about the bigger moves, the 30%, 40, 60, 80s, 20s. That's where I'm looking at, like, trimming. With Brad's strategy, or with the mean reversion strategies, the high frequency stuff, to me, I have no emotional attachment to any of those tokens at that point. I just let it go. And I don't think that strategy would work on the yield bearing tokens. I'm not sure, but
it depends. If there's single-sided staking available for them, then yes. Or if you like both sides of the pair, maybe. But, like, if there was, look, ALCX, Alchemix, you can earn interest on the GALCX token. So if there was enough, I haven't looked at the chart.
It's pretty tough, probably.
ALCX.
Well, it's been moving. It was moving up a couple days ago. I saw a retreat a little bit. Is that 25 to 30 range, maybe?
Yeah, I just wanted to check and see if there's been mean reversion opportunities on this chart over the last few weeks. But this is one that I would definitely mean reversion trade. Looks like smaller gains, but you could probably still make those 1.25 gains. Mean reversion trade, and if there's a big dip, I would start staking this one, because I'm a true hardcore fucking believer in Alchemix. So for me, there's a long-term fundamentals play. I still should have taken some fucking profit, months ago, but the fact is that this one stays pretty steady, so there's not a ton of these mean reversion opportunities, and it doesn't look like it's making big gains on them anyway. Like this one, this is a deviation 3 on the mean reversion. Let's see. Wouldn't play this one, because the margin on the profit is too thin. I mean, even at this wick, it was 3.25, but
what exchange would you run this on, Brad?
For Alchemix, I'd run it on because it's on Binance.
US?
No, if it's on Binance.com. If I had a Binance account, theoretically I would run it there. But I mean, look, this one, Binance, on Binance, Alchemix did 1 day, 7 hours, 3.71%. That's not a horrible trade. But the nice thing about an Alchemix, and the other things that I was talking to you guys about, is if there's a single-sided staking opportunity, or the proof of stake securing the network staking opportunity, then I'm not crying if there's a big dip and I'm in the hole on one trade, because I'm just going to stake it, and I'll keep earning back, build up a nice bounty of staking, because I know that this one's going eventually back up, because I believe in what the product can do outside of DeFi. So,
but I even think in say universal mathematics, I mean, physics, whatever, quantum theory, it just seems to me that everything reverts to the mean. When you look at Destiny, when you look at just look at the friggin' stock market, S&P 500 or whatever the historical one is, go all the way back to 1910, 1920, whenever they start tracking it. And just look at how that keeps coming back to the mean every friggin' time. In nature, everything comes back to the mean. So to me, it's like, I don't know, man. There's something that it's, I don't want to call it self-fulfilling, but you're right, Brad. These always kind of come back to the mean. I mean, even if it's in the shitter, the mean's down in the shitter too.
Exactly.
So it always reverts back. It's a very philosophical thing to grasp onto, or mystical or something, but it just seems to work that way. Now, as to, your product, there is an advantage too. Like when you were running on the well, on the exchanges when you run, I don't know what all the bid-ask spreads are on those exchanges, but a lot of them, if the price is between a certain bandwidth, let's say 6% or 3%, they auto-fill that order no matter what.
Correct.
And then they run their own internal book and, you know, maybe book a little profit when they flip that to the other person. So, you know, in these high tokens that have high volumes, you know, like these 1.5, 2.5 point spikes, I mean, you're just knocking them down all day long.
Yeah.
As it's reverting back to the mean, you know, it's like, it's really impressive.
Yeah, no, it is. And, you know, I've yet to test my automation on DeFi though, because I don't know that it can sustain those levels. The other use of this token is, and it outperforms of this indicator, and it outperforms buy and hold, is for a buy the dip portfolio building strategy. You know, if you're a true believer in a project and you want to accumulate more because you believe in the fundamentals, mean reversion means you're almost always going to buy on the extreme dips, right? And you can automate that. So if you're running a hedge fund or you're just building a personal portfolio, it's a great way to just kind of set it and forget it and accumulate tokens, you know? So that's another good thing as well. So,
well,
I think, Eamon, it's primarily from inflation. But I'm actually not sure.
Yeah.
Anyway,
I don't know. I don't know them as well as you do.
Let's get into some news.
Well, the big one I saw was let me see. It says, my Bitcoin strategy is buy $1." There you go. To me, Musk Twitter deal stuff. I mean, if anybody didn't see this is M&A 101, guys. You come in, you make the offer at 54. You engage, you dig in some dirt, and you're like, oh shit, man, I didn't know about that. And in this case, I guess it's this, you know, bot army or whatever he's talking about. And so then you come in, because what did Twitter do? They took their eye off the ball. So their earnings they didn't meet their earnings number recently, or they're down or something, because they're all focused on that deal. Yep. And so now he comes in and says, I'm not doing it. And so they got a court date, I think, in October, which he's trying to push it further and further off, or, you know, whatever, but he'll just be haggling. And, you know, either he pays a breakup fee a little bit higher than $1 billion, or he drags this shit out for 8 months. And then he comes in and says, I'll give you $30 billion for it. Yeah. And this is the game. This happens all the time. All the time. I find it just that the Twitter guys, you know, and their advisors, I mean, it's been amateur hour there. I'm sorry.
Yeah, totally. And just a warning to anybody that owns a business out there. Private equity is not your friend. They are not your friend. If they act like your friend, hide your wallet, because I have experienced personally multiple firms get in bed with these kinds of firms coming in and saying, hey, we're going to invest a little. We're going to loan you a little. We're going to bring in some providers that can help you a little. And at the end of the day, in every single case, the founder of the company ends up broke or close to it and no longer control of his company. So the game that Musk is playing is the same game that gets played every day with small to medium-sized companies, and they get screwed.
Because here's what happens. That private equity guy, oh yeah, we got 20 billion under management. And they show up and they're like, I want to buy you. And so you're like, holy shit, you know, you're seeing yourself on the 300-foot yacht, helicopter up there, you know, doing a rap video or something, and it's just going to be party for the rest of your life. But what you don't understand, yeah, we could buy you for 50 million. And then you take that in your head and going, oh, they're going to buy me for 50 million. So you get the term sheet. It says we're going to buy you for 50 million. But you always need to look at the very, very bottom. Last two terms will say two things. Either it's a confidentiality clause where you can't show anybody or talk about it, so you can't shop the deal. And then the other thing says, oh, and you know, none of this is binding. This is all for discussion purposes. So the price doesn't mean shit at that point.
Exactly.
So then you sign the thing, think you're on easy street, you take your vacation to Europe, you take your eye off the ball. Now, the one thing they asked for right before the term sheet was your financial projections. So of course you put together these rosy ass financial projections that you're going to be doing 80 million in the next quarter or something. You hand it to them. So you go on vacation, come back, they fucking dump a bunch of information requests on you for a month or so. And then you got to report the next quarter's financials. You never hit them at that point. So you give them one, and instead of it saying, 10 million, it says 6 million. And they're like, oh shit, dude. All these numbers were tied to 10 million, and you doing this, and you're not doing that, and you didn't do that. Well, we're going to have to reprice this deal. So then they come in dramatically lower, and all of a sudden you're like, shit. And then you're lawyering up, spending more money. And then they're just kind of just bleeding you out, man.
Chipping you away.
Yeah. And then you finally close on some earnout type deal with tiny amount of cash up front because you took your eye off the ball. They distracted you, and then you didn't execute.
The worst ones I've seen, I've watched 2 companies have this happen to them. And these guys come in and they're lending money to start, right? And that's your red fucking alert. They're looking for companies that need the money, right? Their cash flow issues or whatever. They come in, they say, hey, we think we want to acquire you. We'd love to, loan you some money up front to get you started. And the terms are horrific, right? And these founders think, well, I've got an exit in front of me. These guys are my buddies. They're going to bring in experts to help me grow this thing, yada, yada, yada. Well, here's how it works. They loan you the money, and then they force you to hire their buddies who probably happen to have some financial connection to their firm. They're going to force you to hire their buddies. Most of the money you got they lent to you is going to go to their buddies. Their buddies are going to bleed you dry, never deliver anything that they were supposed to deliver to help you make your company better. 6 months later, you haven't met your numbers. You can't pay the debt, and a chunk of your company's gone. And guess what? They loan you some more money. And then 6 months later, the same thing happens, and you no longer have a company. They have all your assets. They got it for dirt fucking cheap. The company still owes them money. They turn around, they shut it down, they spin it off, they sell it, whatever they do with it. And, end of the day, end up with you with nothing. So when those guys come knocking, either shut the door in their face or, get somebody on your side that knows what the fuck they're doing and has been involved in these before. I know this isn't DeFi related, but just maybe.
Yeah. Well, one other thing, when people, the loan to own model, whenever anybody starts saying something like that in a term sheet, there's a couple other things you want to ask for in that first term sheet. Now, you're going to resist going to a lawyer because you don't want to spend the money, but you really need to. And, if you need some referrals, just message us. We got tons of them. And we don't get paid anything for those. These are just people I've worked with for 30 years. You want to turn 2 things. You want then to say, no, I don't need to borrow any money, but I want some earnest money in this deal up front. And I want a breakup fee. And so then, which, most people are going to push back on that, but then you're going to know that they weren't for real. So if they love you, if
they walk away, you know it.
Yeah. And they believe in you, then earnest money or breakup fees will be fine. And I'm not talking anything outrageous, just, something that is going to keep them incentivized properly. So, and don't take the loan money. It's sort of my read.
Yeah, at the end of the day, anything that has a loan tied to it, the goal is to put you in straits, right? The goal is to lock you up and dilute the fuck out of you without it costing them anything really. Because the money's being channeled to buddies or their own companies that they already own that they've acquired the same way. You've got to stay away with that. And I love the idea of the breakup fee. I love you've just got, it's just like anything else in business. You got to come from a position of strength. Let's get into a little bit of Discord, a little bit of DeFi news. I haven't played with this yet, but it's pretty exciting. Sushi Swap has launched Sushi X Swap, which is a cross-chain swaps platform. So I'm going to test this out and let everybody know how it works over the next couple of days. But already they've got Arbitron One, Avalanche, Polygon, Phantom, Binance Smart Chain, and Optimism. So effectively, you can swap from one token to a different token across multiple chains without the hassles of bridging first and swapping there and the whole bit.
Wait. So we can move from a Polygon wallet to an ETH wallet within Sushi Swap now?
Yeah, exactly.
Oh, shit.
Yeah.
Dude, that's amazing.
Yeah. And from token to token. So it's not just a bridge. you can start with ETH on Ethereum and swap over to Polygon buying Matic, right? You don't have to do anything else in between. They're doing it all for you. So
wow, that's
multi-chains
cool.
advancing, multi-chains advancing. I mean, we have a couple of projects we've looked at that can do that, but their implementation has been pretty pitiful. So I want to see how smooth and nice this works. I'm going to give it a shot. But I'm actually pretty excited about that. So
yeah, no,
and look, I think sushi needs a boost.
Yeah, they do.
Sushi needs something to reboost that project. So,
but one of the things, like what I do is, I have multiple, shitloads of wallets, but multiple wallets that are main ones, and one is kind of like that long-term wallet, which is sort of the gutted tokens, the iron finances, the whatever, the poly doges,
the zombie tokens.
Yeah, and anything that's just laying dormant. So I put it over in this other wallet, and they all just sit there. But you're always like, oh shit, okay, I got something sitting there over on Avalanche, but it's the same token that's over on Polygon. I should probably just put it over in there in that wallet just to keep it consistent. But then you're bridging across 3 platforms and all of this, and you're like,
by the time you get there, you have half of it left. Yeah.
So exactly. I like this. If I could just, drag and drop, move from one to another kind of thing, that's helps me a lot.
Yeah. Let's see. 1 ETH.
I particularly remember paying those like $300, $400 bridging fees to get out of Polygon.
You're losing here, $50 on a 1 ETH move to Matic on Polygon. So it's 3.37% slippage on this. So, I mean, you got to take into account that, but you would probably pay close to that in fees, moving, bridging, and swapping anyway. But I'd be interested to see a comparison at some point to see if that's the case, how much you'd be losing there. Now, if you were going, say, from Phantom, so let's do 1,000 Phantom to Matic. See, then you're only looking at a negative 1.66% loss in overall value. So $6 lost value there. And yeah, so lower fees on the lower cost chains is a much better thing on a swap like this, but still much easier, much faster.
Yeah.
Anyway, some news today. These guys, these Bitcoin maxis, Jack at Twitter and I love them trying to use this Web5 branding, like they'll circumvent Web3 somehow. And they're all excited because Tether and Bitfinex and a project called Hypercore Proto have come up with a P2P protocol for chat, video, voice communications, and someday they'll allow Lightning transactions on it. So, their whole concept of Web5 as this identity thing somehow replacing DeFi and Web3 to me is just fucking hysterical because as I said in my tweet, laughing out loud, Web5 is definitely a threat. I said P2P chat has only been around since the 1980s. So this is some serious fucking innovation by the guys at Bitcoin World. I like the identity stuff that they're doing. And I like the fact that this is a decentralized peer-to-peer protocol that doesn't require a blockchain. This is a kind of a log file system that they're building on. But I guarantee you, if it has any power and capability because it's open source, every fucking project that needs chat or messaging of some kind or identity stuff, if it's good enough, they'll just use it. So everybody in DeFi will end up co-opting this shit. So I don't know what. It's just so hard for me to imagine that they have serious conversations about how they're going to defeat DeFi with this shit. Because at the end of the day, the only DeFi and Bitcoin are projects like Stacks, where you're actually having another layer. Bitcoin itself isn't capable of this. Anything like Web3, DeFi related that you're going to get on Bitcoin is going to require some other layer outside of the actual protocol. That's just the reality of it, guys. So this idea that they're branding this Web5, we've leapfrogged Web3, blah, 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 it's just such bullshit. It cracks me up. It's hilarious.
Well, I mean, I get the identity thing because we've talked about the biological proof of identity, DPOI stuff in the past. And you need that. But look, I got an idea. We're going to start Web5? We're going to start a Web 10 company. And we're going to double everything they're doing.
Yes,
pay
exactly.
higher yields and make more.
And I'm going to re-release IRC chats from the 80s.
And we're going to do mind
play.
meld trading. We're going
There
to
you go.
crowdfund through mind melding.
There you go.
So we're going to all think about it, and then money's magically going to show up.
Hey, SBF at FTX is making some brilliant fucking moves as far as I'm concerned.
What are they doing?
He's offering to buy Voyager, and he's telling customers, you guys get to split up all of the crypto assets at Voyager, right? Now, on some level, it sucks for the end customer because they're not going to be made completely whole. But here's the thing. Do you want to be made partially whole now, or do you want to wait 5 years, 6 years, 7 years till this thing is done in bankruptcy? I mean, what would you rather do? And would you rather like stick with a project that's been bought by FTX, so it's a massive, large, stable, well-funded project? Or, you know, do you want to hope on the other end after you get your tokens out in 6 years, you figure out where to go? To me, this is a really brilliant move by SBF. The Voyager attorneys are like, it's a low ball bid dressed up as a white knight rescue. Well, guess what? To me, it's a brilliant strategy. If I'm in SBF's shoes, I'm buying every fucking thing that's down right now. Like, I am making offers daily, 10 a day. I've got an M&A team that's like cranking them out. I don't care what it is. I'm buying fucking everything, because that's how you become the next Goldman Sachs of all of finance, right? I mean, he's already moving into stocks. He'll probably start acquiring, you know,
Robinhood,
TradFi people. Yeah. Well, Robinhood and other TradFi people eventually. So, you know, Niblett said Slack already re-released IRC. I didn't even know Slack was based on IRC. Is that right, Niblett? Anyway, I love this strategy. I love what he's doing.
Look, it feeds on what we just said about Musk and Twitter to the lawyers at Voyager. It's like, dude, you know, one doesn't applaud the baritone for clearing his throat. I mean, this is modus operandi, you know, calling it a low ball advantageous offer. Well, you're in the shitter, dude. Yeah. So, you know, you call it what you want. It could be a negative ball strategy. You know, I mean, you don't got anything.
Yeah, but it's just brilliant to say, we're not going to touch the fucking assets. We're going to give those to everybody. You know
I like it because
it's like,
look,
fuck it.
The decision at that point is what's my discount at that point? I.e., how much am I throwing in versus what's going to happen in 6 years in risk? I mean, you don't know. One of these major tokens could just vaporize.
And how much are the attorneys going to eat up in the meantime?
A lot of it. Yeah. So I think you take the deal now with these guys because he is executing. Whatever
this was a decentralized project, the holders could vote. Yeah. Of course, they wouldn't be in bankruptcy, so it wouldn't matter. But you know what I mean.
Yeah, no, I do know what you mean. But yeah, I think, look, at this point, you're looking for an exit, and the founders are looking for an exit, something that keeps them, indemnifies them, and gets them some cash. And look, if you put in $9 million, and Sam's going to give you what, $7 million, and then you're part of the party at FTX, I think, you know, that's the cost of entering the party. Basically, that's the cover charge.
Yeah.
So
well, look, and you get an adult-run company instead of a party
lawyer-run company at that point. Yeah.
Now, there's another thing. A rumor saying they're going to acquire BitHome.
I heard something about that too.
Mess. Yeah. So that's an interesting move because that's a fucking lucrative as hell market. That South Korean market. There's a real This guy fucking fires on all cylinders. I know a lot of people think he's a little sleazy and that his philanthropy is all PR based, but
so what?
I got to tell you, a smart motherfucker. So
PR based philanthropy is called strategic philanthropy. There's nothing wrong with that. That's what you do.
Exactly. Yeah.
And
BitHome is a hot fucking mess. So, you know, in terms of, you know, the past fraud and the past bullshit by the original owners, this is, you know, a good move. It's a really, really good
That's
move.
The South Korean one, right? BitHome?
Yeah, South Korean BitHome. Yeah.
So look, you come in, I would say South Korea is definitely one of the top crypto using countries in the world. It's definitely top 5, if not higher.
Yeah.
You come in and they've been burned a couple of times on shady shit. And you come in and stabilize the whole like investment market for crypto in South Korea. I mean, you're going to be God's child at that point there. I mean, it's like, they're going to love you.
how many customers come back to BitHub or how many new customers come in because now it's backed by FTX. It feels much safer. It feels stronger, you know? So good
BitHub
move
by
on their
FTX,
part.
something like that. Yeah. I like it.
What the fuck? Martin Shkreli.
Wait, which guy? Oh, this is the drug dude. Okay, yeah.
Yeah.
The asshole who like took that life-saving drug and turned it from $4. Yeah.
He's actually going to try to start a Web3 drug discovery platform. Which
is he out of jail yet?
Yeah. He came out of jail and started talking NFTs and fucking DeFi immediately.
Great.
Yeah, great. But this idea is actually fucking brilliant. But do you want the guy that's willing to kill people for pricing in charge of it? It's a great DeFi idea. Drug discovery, funding. We've had some experience in the healthcare field with funding research and that kind of thing. It's a great idea. It's just the wrong fucking dude to run it. And how brain dead are you not to realize that your name shouldn't be anywhere near it, even if you're involved in it? Like, it's just stupid.
Well, yeah. Once you pull a move like that, where you lose people's money, it's like you're pretty much a pariah. You know, if you take money, and that too. I mean, that's obviously the worst thing. I mean, there was an interesting article. I think it was in Vanity Fair a couple of years ago, maybe Atlantic, where it was some gal wrote an article how she had went on a blind date with him, and just explained like he went and he had some like he bought like I don't know what you call it in music. Maybe it's the pressing of the LP or something.
The original. Yeah. He bought the exclusive rights to that LP. Yeah.
What was that? Was it Doobie Brothers or who was that? Who was that?
I can't. No. It's,
wasn't Doobie Brothers. It was something else.
No. It's much more modern than that.
But she talks about all the stuff, how he would only talk about him, you know, the usual shit that you don't do.
Of course.
On dates. He's a total fucking troll. Yeah. So look, there's going to be feds all over this out of the gate. So I don't think that's going to see the light of day.
We should cut off here pretty quickly, but you know, we always talk about banks entering. Barclays is expected to invest millions of dollars in Copper's funding round. It's a crypto custodian company. They're coming, people. Coinbase better wake the fuck up and get acquired because Wu-Tang. Thank you, Shizzy. Yeah, Shizzy's probably.
That's right, Wu-Tang. That's right.
Yeah, it was a Wu-Tang album. Nice. He was they had the only copy. Coinbase better wake the fuck up because as soon as I can go to fucking Barclays or Bank of America or whatever and buy my crypto, the average schmo ain't coming to Coinbase. Why am I round tripping from Coinbase transferring back to my bank and paying you all the fucking fees? I might as well keep it all in one place. I'm telling you, I personally wouldn't hold. This is not financial advice. I wouldn't be holding any of that fucking stock unless I'm, on a short maybe.
Wait, which stock?
Because
Coinbase.
Yeah. I there may be ups after this. Don't take my advice. I don't know what I'm doing. I rarely invest in stocks, but banks are going to be selling fucking crypto. They are going to be selling crypto. You're
and nuts. Fidelity and Ameritrade and everybody. It's
and they're going to be selling it. And even if it's through a company they own a piece of, there'll be a direct pipe with no fees. You know, you're not going to have to deal with the shit you have to deal with now to get money off of Coinbase or even Binance US or whatever, right? I mean, that's what I use now is Binance US. They are going to be better for people like me that like to trade. Coinbase doesn't have that value proposition, except now they have the subscription trading model, which has some potential. But they're still
like, I want to buy it and here's the price. There's not like a order book or anything, right?
Yeah. No, there'll be an order book. Yeah. No,
okay.
Coinbase Pro is moving on to the main exchange, and then you'll get a subscription model for trading, right? So you pay $30 a month and you get fee-free trading, which is a great move by them.
No, that's not bad at all.
No, it's an awesome move. And I think it's the one thing that could save them to some extent. But at the end of the day, when people start to realize that they're paying $50, $100 for the quick and easy buys, because they just want to hold, that I want some Bitcoin in my portfolio.
Yeah.
When they figure out how bad Coinbase is screwing the average Joe, that makes a lot of sense. Hey, Shizzy says, Coinbase is my on and off ramp now with subscription. I love it. Saves me a lot of money. Wait, so you're not with the subscription, is the transfer also free, Shizzy? Because if they're doing that, that's really fucking smart. That actually will shift my perceptions a bit.
I still think they charge for the withdrawals. I haven't been in there in a couple of months, but I don't think they were hitting me for the withdrawals.
I thought they charged like $20 to get it out.
Well, you got to go from there to like USD on their platform, and there's that trade before you move it out into your bank.
And then there's a wire or an ACH fee, isn't there?
I don't think so. I don't think at that point. I think because they get you on the trade. They get you on the trade from that to dollars. Yeah.
He said his transfers are almost free.
Yeah.
All right. Well, that's
take a look at that more.
Okay. So he said, so it's like 1%. 1% is still pretty high. I mean, you know, if you look at
what was Binance back in the day when we were all before they shut down everybody in America, it was like 0.01, right?
Remember. Well, the trading fee were 0.0075.
That's right. Yeah.
The transfers and withdrawal fees, I don't remember. But hey, that's a good point. So I can reconsider my opinion. I still think banks are going to rock the world of
where's copper jurisdiction, or where's it HQ? London or Switzerland?
Yeah,
okay.
Switzerland. Yeah, Switzerland.
Interesting. All right.
Yeah.
All right, buddy.
Right. Let's wrap it up. Shizzy, Niblets, Amen. You guys rock. Thank you so much for participating. We love you. We appreciate you. We love your thoughts and opinions. Thanks everybody for listening and watching that doesn't participate. We still love having you. We appreciate you. Please, if you love what we're doing, rate and review us on Apple Podcasts. Give us a thumbs up, subscribe, and click the little bell on YouTube. Tell your friends, share the word on Twitter. If you have any thoughts, comments, feedback, guest ideas, go to B05 Crypto on Twitter or Telegram. My DMs are open. B05 Crypto #2143 on Discord. What else am I missing, Joe? I guess that's it. Well, everybody have a lovely day.
Yeah, absolutely. And watch the heat. You know, maybe go out and tee up around 18 about now. Yeah. You'll be doing fine.
Yes, stay out of the heat, people. We don't want anybody dropping dead.